Yeah, Alan, over to you. I mean, how have you seen the pandemic impacting the M&A in seafood in Asia, and then kind of what's your sort of short and medium term outlook on that?
Thank you. Like Matthias mentioned, demand for animal protein is still here. Everybody staying home around the world has helped consumer to learn how to prepare seafood at home. Deals that were ongoing in January 2020 are still racing to the finish line. Like you mentioned, FCF's Bumblebee, Nisui Marabeni to Danish Salmon, the Hughes announced the acquisition of Navodia Indonesia yesterday. And Biomar is still signing an MOU with Viaoak to invest in the stream nutrition business. Obviously, for Asia, on-site DD for cross-border deals has become a major challenge. I echo Tim's view in terms of finding the right professional management team that is separate from the owner family, being often a very important prerequisite for a successful M&A sale. There is a very scarce supply in Asia for sizable targets with strong management team. But however, this pandemic will make companies even stronger in the medium and long term. Valuation gaps remains to be an issue, but large companies with very good access to capital and customers will weather extreme volatility in trade. Hence, they are not in any kind of particular hurry to sell, especially in relation to accessing American or European buyers. Finally, there's a trend to invest or do M&A in agri-tech to help control costs and to improve on food security.
Thanks, Alan. You mentioned cross-border deals there briefly, but I wanted to ask you a bit more about that. I mean, do you think that there'll be a tendency for when things kind of start to normalize or move to the new normal, there'll be more cross-border deals in Asia as companies look to, say the big Japanese or Korean companies, or look to sort of diversify their supply base so they're not like locked in with, one country in terms of supply. Do you think that could be a trend, or do you think that it'll be quite quiet on the cross-border front for the foreseeable future?
I think that for Japanese and Korean companies, and in addition to Western companies, generally speaking, they are trying to access resources in Asia. The challenge for a lot of these companies is often how do they access resources, because in Asia is a big space, right? There are a lot of different laws, different jurisdictions, but like Japanese and Korean companies, for example, they are very experienced in accessing, say, Southeast Asia or South Asia jurisdictions, and indeed they have continued to do it during the pandemic and try to see what kind of avenue of growth that they can execute in the future. And I think they're monitoring the situation very closely to see whether they can somehow achieve an edge. As you already know, a lot of companies in Asia already have offices or boots on the ground for a lot of jurisdictions, right? For major seafood jurisdictions like China, like Vietnam, like India, they already have people on the ground. So they can access deals immediately that are perhaps much more difficult for, say, private equity.
Alan, I wanted to get a bit of a sense from you about private equity in Asia. I mean, we've seen quite a few, I say quite a few, at least some notable deals. The biggest that I can think of being Permira buying into GrowBest in the kind of feed sector in Asia. Do you why have we not seen more of those deals with private equities buying into Asia? And is there an opportunity there with the pandemic, or is it going to really deter them?
Well, I echo with Jose's view that people need to eat, and private equity loves sticky customers, and no matter with or without a pandemic, people are going to eat seafood, and that is very attractive to financial investors who are looking for that kind of cash flow stability. Now, getting to cash flow stability, that in Asia ultimately is a seafood exporting kind of economy. And the volatility of farm gate prices or export prices of seafood, coupled with a number of governance issues, have made seafood investment quite hard for PEs. and that is also that in Asia in particular, that when you go for an IPO, that biological asset risk is also something that, for example, the Hong Kong Stock Exchange does not really like. So if you're trying to IPO something with a lot of biological assets, it can be challenging in this part of the world. Now, having said that, strategic and PEs that both continue to express interest in a number of ongoing seafood deals. If the difference between these two is that the strategics are looking in areas and business with lower geopolitical risk, whereas the private equities are looking for like a middle class consumer story. I think I can't say for everyone, but I would think that many management teams I've talked to says that the pandemic is a transient matter. It will not change the long term trend in Asia. Indeed, the pandemic has been a massive boost for seafood e-commerce in China, for example. So I would foresee that a lot of investments are still coming into this part of the world. But with I think, and indeed for outbound as well. But the difference here is that I think Western investors or PE investors are having an increased appetite in Southeast Asia. Investors out of China, whether they're strategics or financials, they are seeking to deploy capital offshore. And in the meantime, everyone is looking at agri-tech investments. So, and that includes the seafood sector as well.
Another question has come in here about is there a continued demand from Chinese companies for buying Latin American or Norwegian assets? Is anyone still seeing that?
If I may.
Sorry.
Yeah, go ahead. Please do.
Go ahead, Allan.
Thank you. The question is that would the Chinese kind of companies still go abroad? I think the answer is yes, because the issue here is that they want to deploy capital offshore, despite the fact that there's a lot of geopolitical risk. The challenge here is whether the incoming countries will accept the capital. That remains to be that remains to be a big uncertainty in certain jurisdiction. But overall, the Chinese is still trying to secure food resources globally, and that trend will continue.
Yeah, and on the flip side, if you look at dealing with Chinese buyers from a seller point of view, some of the difficulties have been, again, not only at the language level, but also the requirement for Chinese companies to have certain levels of approval,
yes,
either at the provincial or federal government, in order to access the capital and be able to conclude the transaction. That makes the transactions long again and more difficult. What I would caution the potential Chinese buyers is that there is a wave in Europe at different countries congressional levels in passing protection laws, where just like the US has all kinds of transactions in certain industry sectors, including food, will have to be now government approved. And I think that is going to add a level of complexity to the M&A process. And
yes,
that is something that we are absolutely aware is taking place in certain jurisdictions in Europe. It has not yet resulted in similar efforts in other countries, but I think that if Europe does it, it's possible that other countries will put in place those protectionist regulations as well.
Well, yes, absolutely, and when we do M&A in China, and that's outside of seafood, we're doing M&A and investments in general in China. We're talking about onshore capital, offshore capital, and offshore generally means Hong Kong. And if the capital is in Hong Kong, then that's an open economy. You can invest from anywhere to China to Chile the next day. There's no restriction whatsoever. If the capital is in China, there are a lot of approvals and a lot of processes that could involve. And indeed, we have talked to a number of state-owned and privately owned firms in China, and they're acutely aware of this limitation. And of course, like the process, the bureaucracies required for approval is inherently complicated for large firms or state-owned companies, and that applied to not only in China but also perhaps in other Asian economies as well. But that goes on to the kind of beginning of the long trade conflict that we may about to experience, and that would really change the way that, in particular for China to do outbound deals. It will have a dramatic effect from the seller communities. So with advisors that represent many seafood companies here, that you will understand the complexity of dealing with buyers from China and indeed from many Asian economies. But at the same time, where I think this is where advisor communities and professional service communities can stick together and offer advice and friendly tips on how to deal with different situations. And from my experience, for Asian investors going outside of Asia, it's very important for them to be well prepared and to think about how do they get to the end and then plan backwards to see how much time they need. And that's the advice that I always give to Asian clients going offshore, whether going outside, to a different Asian countries or going outside of Asia.